This investment update is brought to you by Trobe Financial. Make your money work harder for you.
Hello, this is Chris Andrews from Trobe Financial. 12 months ago, our Reserve Bank's statement of monetary policy showed an economy in crisis. Travel restrictions were hitting education and tourism. Lockdowns had closed large numbers of sporting clubs, pubs and restaurants, and all key measures of consumer sentiment had fallen to their lowest levels since the 1990s recession. Haven't things turned around in a year? This month's statement couldn't have been more different. Yes, the borders are still closed, the recovery is uneven, but most indicators have turned positive much faster and much harder than anyone could have expected. Since February, we've seen 10-year government bond yields increase sharply, which is what happens when markets see a rapidly improving economic outlook. Household spending, dwelling investment and exports have contributed to a snapback in activity. Importantly, we're seeing a rebalancing from public to private demand, which is a critical step for any recovery to be sustainable. Meanwhile, low interest rates have lowered funding costs and reduced our exchange rate, which supports exports. Last week, the federal government released a budget aimed solely at supporting the rebound via stimulus. And all of this is having an impact. The NAB Business Survey in April hit fresh record highs for both business conditions and confidence. Retail trade, which is responsible for about 10% of Australia's employment, rose by 1.3% in March. Consumption patterns are starting to return to normal. No recovery runs in a straight line, but for now, Australia's economic outlook is strong. This is Chris Andrews from Trobe Financial.
This investment update is brought to you by Trobe Financial. Make your money work harder for you.